FutureSpeak, December 6, 2017. All right, we're going to look at 24 different contracts today. That's futures and indexes and a couple of ETFs. Adding one at the very end of the show, cocoa, only because I did a special on Thursday where I looked at the DBA and the heavyweighted contracts in there, their highest holdings. And the chart was interesting to me, so I thought for a special I'd just bring it in there today for you to see. So that'll be the last thing we look at is cocoa, the cocoa ETF. So we're going to look at energy, foreign exchange, the metals, the treasuries, the stock market, and then the grains and softs. So plenty to look at in here, and for those of you that are new, we're going to start out by showing you the side-by-side analysis. This is the chart that we look at, actually two charts in a single grid, where we are looking at the left side being the weekly chart. So what we have in here is our cycle brackets on the bottom, our colored phasing in there, and whenever you see big tall green areas, you know that it's been exceptionally strong. And small little yellow areas mean very minor little corrections in the cyclical corrective periods. So right now, just so you can see, we're in a decline right over here, and the energy markets have turned, I would say, softer. Not done any significant damage yet, but I think maybe even a little bit of a surprise how soft they have gotten in here. So let's blow up these charts so you can get an idea of what we're talking about, and take a look here at the light crude chart. So we're in a small corrective, a minor corrective period in here. That's this right in here. So you could see that one right in here also where it came down. And then when you bottomed and turned up, you turned up strong and went to a new high. So this is a similar area right in here. And the daily chart's making me a little more nervous, I think, than the weekly chart is. It's still strong. We would expect to get some kind of a rally starting in here fairly soon and then roll over again for a bigger correction. It could get up here and test out that high, just and see a lot of strength like you had over here, or it could fail to make that high and then roll over into a bigger corrective period. We don't really know. When I look at the daily in here, and I'll switch over to the daily chart right there, this is, I have a little reason for concern in here. There are two major cycles acting in here and one minor cycle, and you can see this is where a low was expected, and you can see it, well, it was exact. And each of these have each of these small cycles look like this, so you can see how they traced out. So you can see that there was an alternate cycle low right over here, and then this cycle low came over here. So the next one is due right over here. That's in about 3 days. So we think that this softness that we're seeing in here is likely to keep going for about 3 days. It's a plus or minus a day probably, so call it 2 to 4. It's gotten into this support zone right over there and actually gotten close to that 78.6%. So that's pretty significant that it's given up that much ground. And then there's this support right over here. That's a 78.6, sorry. This cycle low right over here that was violated. So that gets me a little bit concerned when I see that. So it's possible that, you know, we have some extended period of this weekly correction to go through. If it holds over here at this cycle low support and doesn't really break under the 78.6, you could get a pretty sizable upturn here in about 4 days. That's the key. We want to see how it acts in this rising phase right over here to get a real handle. Right now, what we see is the numbers in here at resistance, so we're going to look at this range that's likely. 59 right over here, and the 78.6 at about 55.90. So 55.90 up to about 59 would be the range we would call for. The next support here is at about 55 even. So, you know, that's probably the outside of the range here in the near term. We could see it kind of getting stuck in there right now. There's hope for OPEC being able to control prices. So it's not likely that they give up a lot of ground in here. So, excuse me, we kind of do like the idea of it getting stuck in the range. And gasoline gives us a similar look right in here when we switch over to RB. Let's just open these up here for you to see. And the weekly on the left, the daily on the right, you can see that you've had a pretty good break here into this support zone. Let's blow that up. So again, we have what we think is a range that it's going to get stuck in right here. Now, so you note the 34-week moving average at about 163 and the bottom of this support range at about 165.14. So that's about the lowest we would expect it to get in this downside move. Now, the top of the range in here is really the top of this declining support zone. It's declining because, well, this is still declining. We don't really have a good anchor point in here to come up with this resistance. So this is around 176 on the top of that. So we would expect that area of 165 right here, 165.38, and this is around 176.50, 40, something like that. Oh no, let's get it exact. 176.20, we'll call it that. That's probably the range it's going to get stuck in for a little while. If it breaks this area of support right over here, it's going to tell a lot worse story. Now, you can see in here, this cycle is running a little bit long, and that's after some almost perfect cyclical patterns in here. We only have the major cycle in here. We don't have any of the minor cycles put in. They were a little bit erratic, so I can't figure out if they're 1/3 or 1/2. There's just not any clear look at there. So you could see in here the low as it was expected here and here and here. Those are all perfect bottoms. This one is running a little bit past and coming to support. So we would guess that it's going to bounce from here. So that's why we kind of do like the range that we're talking about. The range, the bottom of it right here is 162 on the daily chart. And this point right over here, which is the extreme top, 184 approximately. That looks like the range we're going to be stuck in. 160-170 is the bottom support here. The 34-week moving average coming up to about 159. So all of those, that looks like the bottom area of support. This last high up here looks like the area of resistance, because when you have a positively configured cycle like the one that we have right here, the odds are high that it's going to test that high. So here's your positively configured cycle, and then the likely upturn. So that's why we think it's going to hold in this support zone and then get the bounce up in there in gasoline. Heating oil is the next one we're going to look at, and this one really looks toppy to us. Let's go over here to the weekly first, and you can see, look at this. This is a triple star, evening star being formed in there. That really is very toppy looking right there. We had projected it potentially getting up to the 61.8% fib, and now that we have this, we have to lower our projection based on the fact that it has this toppy look to it. Again, we can see the support right over here at about 181, and we don't really have a resistance on here. It's a little easier to see on the daily chart. So just look at about 181.60 as the bottom right over there, and where that support area is right there. And then when you look here at the resistance up here, it's at around 196.30. And see, again, this is bothering me, and that is that the cycle low that's due right over here, it looked like it had come, but now it came and broke. So either this is shifted out over here. Now I'm telling you that the probability of that is probably only about 15%, or we have a breakdown in here. So we're not really sure about that yet. Is it a violation or is it late? That's what that note is there to our subscribers. And you can see in here, looking at these other cycles, I mean, none of them were really late. I mean, they were pretty spot on when you look at the cyclical patterns there. Every one of them, I mean, bottoming exactly where you would expect them to bottom. This one may be a day off over there. This is spot on right here, right on here, or a day off, pretty much spot on here. This one right over here, maybe a day or two late. So when you look right over here, we're already about 4 days late right there. So this, 4 or 5 days, this is worrisome when you see this. And we've seen the commodities really turn weak in here, so that might be meaningful. And I'm concerned about this. So, we establishing ranges in these things. Basically, we think they're going to hold. And I'm a little worried that this low around at the bottom of this support and lining up with this little mid-cycle low right over there. So that's 184. This is 185.60, somewhere in there. That's, if it's got to hold there. If not, it's going to be really looking ugly, and we'll have had a daily breakdown. And it says that basically don't look for a lot of recovery. Now I'm going to go back to the weekly over here. I got to go back. That's wrong. All right. Pardon me while I just line this up again for you. So here's what I'm looking at here, and that is this downturn in here is pretty significant, and it would mean just you get a little bit of uptick in here, a little waffling, but the date that this ends at around the end of January with this top in place. So that may be the reason why we're seeing all of this weakness over here, and that it actually has topped, and we're going to start creating a negative cycle pattern in here. So that's, I'm concerned about that. It's a violation, and the fact that it should have bottomed already is saying something pretty bad for heating oil. And of course that wouldn't be great for the other contracts here in the energies. Now, natural gas, this one really is a disappointment to me. Now, it doesn't surprise me that it gave up a little ground. It was going to give up a little ground, but it's giving up a lot of ground, and it's really giving us a sense that, see this perfect cycle right in here, and then this one right in here, that this one, which held and gave a lot of ground because of the warm weather, if things were good, then it wouldn't be threatening to come down at that level again. So this right over here is about week 2 or 3 in January right here. It looks like this is going to be in a declining phase. If it breaks this support area right there, that's a pretty bad violation. That would be a horrible sign. That's around 276, so that's a key number to be watching in here. In fact, I'm going to set an alert on there. I'm just going to go create alert. That will then, I'll let the computer remind me at or below 276.20 is where it's picking it up, and I'm going to go create, and that is now created. So you can see in here that little arrow right there, that is the alert setup. So what we're looking for is really some further decline in here, and hopefully it holds that level and doesn't break. Here is the, well, that just froze, so wait 1 second. And I'll try to get this natural gas back up here. All right, that was odd. Okay, got it back. Here is the natural gas daily chart. So what we're looking at in here are really 3 different cycles that are lined up in here. And this dotted line right over here seems to be the one that is most dominant right there. You can see that. So the dashed line over here is the second one, and this is really the minor cycle in here. You can trace out all of them. They really look really good, and you can see in here these small ones in here make up the big ones. So you have 1, 2, 3, and that's 3 and 4 right in here, right? So there's your 4 cycles, makes up this big one right over here, and then the midpoint you can see is right over here. So now when you look at it in just this last cycle right over here, this is ugliness. When you look at this, this is broken down. What you get is the small cycle very clear right in here. You could see that, and then this, and then the breakdown. So this is the whole negative period of the minor cycle. But if you had this breakdown right over here, it speaks about the entire pattern in here, which says to me that natural gas is in a lot of trouble. and that not only does this next week look negative, but then if you get a minor bounce, you're going to get into the next negative period over here. So we would project it to be down in through here for the week, get some kind of a bad rally in here, and then be moving on the downside again. Because we don't have an anchor point in here, I don't have a resistance point or a sell area yet, and there's still 4 or 5 days in here to go. So we don't have, all we know is that it's broken. We don't really have the resistance in here. If anything, I would just use the slim ribbon as a resistance point coming down right in here. So that's, pretty good look at, something that really looks broken down to us. So while this is still in this green zone over here, this is giving us a lot of warnings over here on the daily chart. So when you look at energies as a whole, they've really weakened. The whole complex really looks to us like we've lowered our projections in there, and I think the best we could see is ranges in light crude and natural gas, the ones we laid out. But overall, we would call it really much worse than it looked just a couple of weeks ago. All right, so now we're going to look at the foreign exchange, the dollar, euro, British pound, the yen, the Aussie, and the Canadian. So we're going to start out by looking at the cash index in the dollar. That's $DXY, and got a good rally in here just recently. A nice pop. It's didn't violate anything, though we would have to say that being that the rally came where it did, bouncing off that 618, it probably makes the downside objective over here in this next couple of months down around 89. It probably makes that harder to get to. So the highest probability is testing this area around 91. Right now we're 93.55. It's still a very bearish setup that we're seeing in here. So, but it held in here at an important area and you can see a little bit of a bounce. It's not all that great, and getting into a period where the risks are really going to start growing in there in the dollar. When you look at the daily chart in here, what we did is we put it in an alternative. The alternative, we shifted this over a couple of 2 bars, and there's a potential that our cycle analysis is a little bit off from last time. So what we expected was that it would turn down after this right over here and then come down right in here and get a rally and then come down again. That was what the analysis was that we've had. Now we left that in here. However, when you look at the potential for this being the low of this minor cycle right in here, then what you get is this rally right in here. It likely gets up somewhere into this area and then rolls over and goes to the downside. So you can see that the alternative is just slightly different. They both end up resolving themselves negatively. However, the question is it going to be able to, is it going to go straight down here? Is it going to hang up a little bit more in here and then roll over? We raised the sell zone up into, we had it down at the 38.2%, which had obviously moved right through. So we've raised the sell zone. We still believe this is a sell zone in here, anywhere in this area between 93.34 and the 78.6, which is 93.83. So that whole area to us is a minor resistance in the sell zone, and we expect it to roll over from there in the dollar. So that should, of course, be favorable for the euro currency /6E, and the euro currency had a pretty good sized down week in here when you had the dollar tick up, but there's no violation in here. As a matter of fact, you could see the momentum is still strong per the Hull moving average, turning up strongly right in here. So that's where we are right now. This cycle pushing up, this cycle pushing up, and then obviously some minor cycle pushing down. Do you want to see the minor cycle? Well, it's on the daily chart. So you look over here, and there's your minor cycle pushing down. So this is our buy zone area of minor support. and we believe that the dollar is soon, within a number of days, going to roll over and go down. We believe that the euro currency is going to move to the upside. This support zone is 117.50 up to about 118.32. So that's it's basically in there right now, and we think this is a place to be hedging to the long side in the euro currency. And you can see by our projection, we think that the highest probability is for it to bottom in here and then move to the upside. That is the euro currency. /6B. It's like something in the news every day on the Brexit and we had this perfect bottom in here and it moving up. You could see on that weekly just exactly in the bottoming in the time frame that we were looking at. So you can see it's still in this rising zone. We expect it to make it up to about 138. That's a long way in here, up in these next month or two. And we're gonna get into a little corrective period in the middle of that. So you can see right in here, this one right in here was this low right there, and then it exploded to the upside. So somewhere in here we'll roll over a little bit, and that might be what we're doing now, a few weeks down, and then we think we get a pop. So we think that the British pound is in a spot where soon it's going to turn up. Here's a really positively configured cycle in here with almost no ability to dip right in this period where it was supposed to. And you can see in these other corrective periods, you easily move to the downside. Here into the nest, here into the nest, here into the nest, here into the nest, it couldn't even tick down. So, I mean, it's super strong. See the small cycle, that's this one right in here, and then this crazy little thing right in here, and it exploded up. So this is a very strong configuration, and it's now gotten into the slim ribbon. You can see our momentum is pointing to the upside. Here's your green arrow on the slim ribbon. And this is probably more of a flag than anything, and we would say it's likely to move back to the plus side in the British pound. So that is /6B. In every one of these, we have the ETF listed in case you want to trade the ETF instead. And you can download our watch list that has all of the futures and ETFs on it by going into our resource page under watch lists. So the next thing you can look at is the US dollar /JPY. This has really been a tone change in here. Here you could see right in here where the dollar peaked. Remember, because the dollar is listed first in here, that you're essentially looking at the dollar versus the Japanese yen. The Aussie, which I'll show you, is the opposite. In other words, you're looking at the Aussie versus the dollar. So here you could see we're in this rising period right over here. Now, you can see this rising period over here brought you an upside explosion, right? Well, I guess that could always come in here where the dollar gets super strong against the Japanese yen. And here there is time for that to happen. I don't think it's really likely. I think that it's more likely based on Japan needing to do something to get interest rates starting to move up at some point, that the dollar is going to get weak. But this is not a bad pattern when you look at this on the weekly chart. And what you see is support right in here, right around the 110 number. This resistance up here, right around 114.50-ish. Right there, that's 114.65, sorry. So that's kind of the range it looks like it's stuck in right now, and we'll see which way it breaks out. My guess is it's going to break to the downside. Well, that's because I'm bearish on the dollar. Now, this is a negative pattern. Now, you can see the pattern in here as it was pointing to the downside. This is where the dollar got some strength in the last few days, and it changed this a little bit as the Japanese yen got a little weaker, the dollar got a little stronger. But you see it gets up right to this counter trend line at that cycle area, and now it's starting to roll over. So the new projection really should be something more like this, where it just kind of gets up to this area, and then we get one more move to the downside over here. That's what it would look like, right? So you can adjust that on your charts and then turn up right in there. The question is, what does this whole period right in here look like, right? So if it comes back down, rallies, and then fails, you know that the dollar is in a lot of trouble against the yen. If it comes down a little bit, doesn't take out this low, and then turns up, well then it has a much stronger structure in there, and that it would be better. So right now it's really just sitting in the middle right over here in the US dollar Japanese yen. I tend to want to be negative based on what I'm seeing overall, but it doesn't really look all that bad. This cycle violation that you see right over here was the worst thing that I saw, but we're running out of time right over here. So that's the problem, 4 or 5 days for it to pull back in there, and then we have to see what that one looks like. So we're just going to be neutral with a tiny little negative bias if you want to have any bias there, in my opinion. AUD/US dollar. Whoop, wrong. AUD/USD. This is the Aussie currency. And you can see in here that there's a bottom due. You can see right at this point right over here where you have the nested lows right there and how it turned up. Here you had the nested lows right over here. It turned up, but it then failed and gave you a bearish reading, falling straight down here to this period. Excuse me. So, with this negatively configured cycle, what it says is that the Aussie, well, it's likely only to get up into this resistance zone over here over the next couple of months into February, but a bottom due and a rally that should be worthy of a trade in here once the bottom is set up. So take a look in here. We look like we're trying to bottom, but it hits this minor resistance on the daily and then rolls over. So, it doesn't look so much like the bottom is in place. Now, when you look at the date on this is January 9th. When you look at the date on this is January 5th. So you could see somewhere in there around the first week, second week of January is where the bottom is likely to come based on what we're seeing in there. So when I go back over here to the daily chart, that would stretch this out a bit and open it up a bit more. It wouldn't be the worst thing, but I'm trying to look for where the bottoming is most likely to come. And to me, it's most likely to come sometime early, out there in the first week of January. So we're going to see how this shapes up. The dailies are giving more of an indication that, the bottom really is not in place yet in the Aussie. As you see it drop down from that minor resistance area, which right now is 76.30 to about 76.55, and it just hits it and plunges. So pretty important area that you could see right there. US dollar/CAD, the Canadian. Let's start back on the weekly chart right here. Blow that up. Well, you can see it's kind of just flagging, right? We think it's rolling over at the 50%. The negative configuration that occurred in here, I use that word a lot, right? What that essentially means is that this low was below this low over here where the cycle started. So it's got this kind of a shape to it. Actually, it didn't draw that right. It's more like this kind of a shape to it, right? So that's a negative configuration versus positive configurations that look like this, right? So when you get those, you make new highs. When you get this, you fail at resistances. Those are the highest probabilities. And so this one, likely that this failure is important. So somewhere in here it rolls over, I think, and the dollar gets hit against the Canadian in a big way. But right now it's not really showing you that. Here's the daily chart right in here. And right here the dollar looks like it's going to rally, right? Because the low is supposed to come right in here, and look what happened. So, here's your bullish cycle right in here. Here's your bullish cycle right in here. And this right in here. So this is the beginning of this rally which we had projected, and you can see that the dollar against the Canadian looking probably stronger than most, as they're very bullish patterns that we see in here. Note the minor support zone, how it has held it, and then moved up nicely. So that is a look at the currencies, and overall we would say we do believe the dollar is going to get hit again, and that the euro, British pound, those will get some pretty good bounces in there. All right, so we're going to switch over to the metals right now. So I made a comment yesterday in the video that I did when I looked at the DBA, the agricultural commodities, that the dollar seemed to be following commodities versus reacting a lot to the movement in the dollar. The dollar's been a little strong, a little bit of a blip, but the metals have been a lot weaker, and we've seen copper get really a lot weaker too. It's really a huge disparity between understanding what the stock market's doing and the growth that it's suggesting versus what the commodity markets are doing, and the massive disparity between the weakness in commodities and the strength in stocks. There's going to be a big change in there. Don't miss that video. So let's take a look at gold, which is much weakened when we look at this, and coming down to a very important area. So we had originally thought that the minor cyclic action right in here, that's this small pattern right there, was going to drive it up a little higher. And then it would roll over and fail into this period right in here. Well, the rolling over and failing came earlier, and you can see in here it actually has just got down to that low right over there, which is the cycle low, the minor cycle low. And having done that with something like a month, maybe 6 weeks ahead of it, is not good. I mean, it really says that there's risk in here. So the question is, can it hold right over here and get a bounce, get saved by a little bit, and then not give up a lot of ground? Or will it break down under this key level, which is right around 163, pretty close, right? 162.50. And then if it does that, well, the next target will be down over here about, that was 1262, and this is 1237. So that would be the next target if it breaks down underneath these levels. Now we have, like I said, 4 to 6 weeks to go when we look at that. So here's the daily chart right in here. There's a lot on here, so I want you to see what's going on. That this pattern right in here, is getting a little late now. It's the shifted cycle right over here allows for it, but this was the original one right over here, and it's gotten pretty late, and it's now broken underneath. Where is that key low? It's right over here. So you can see it's the same thing on the weekly and the daily. It's just at that level right over there. We're looking for a bounce in here, and if we're right about the dollar pulling back again and the euro getting a bounce, this should get a bounce in here. You've got this little inverted hammer going on there. That might be a sign that buyers came in, but then they got a little nervous and sold it off again. But we think that we're going to get a bounce in this area. Now, the upside right over here of this declining resistance zone is 1284 down to about 1279. That's about the best we see a bounce coming in here and then rolling over again. So you see this ends on January 3rd. I can't make a case for the low in gold anything sooner than that. And then there's these patterns right in here, which this one right over here has a low January 20th. And I could make a case for it going out that far. So the pattern in here is not good, and it really looks to me like holding over here and getting a bounce is about the best we can hope for, and then that bounce failing in here in that short-term declining resistance zone 1279, 1284. That's really the best case I can make for it now. It gave up a lot of ground. So silver is actually worse, and the timing is clear. So you can see the breakdown that's already occurred in here. This is very clear as it's gotten under that level. Essentially what that does is you had the positive pattern here that failed at the 61.8. It breaks down. That's this right in here. You could see that. And then this bounce due, and then the decline right in here. So this goes out to February. This goes out to late January. So all of this looks to me like it's 6 weeks at least before we finish up this period. Now, we talked about the real bullish period for silver and gold being mid-January out through March. That's out over here, and once we get past all of this, then I think it'll be much better for gold. Bitcoin hopefully will be, it'll be done, and then people will start looking at gold instead. So that's a look at the silver market, which is due for a bounce on the weekly chart. Now, when I look on the daily chart, you could see identical bottoming, right? So this is the point we expected the low to come. Again, we have a negatively configured pattern. So this cycle right in here that bottomed right over here, and the bigger one that bottoms right in here, it rallies and then comes down, breaks the low. You get a rally probably into resistance and come down and break the low. So our upside projection is in right now into this resistance zone. It might end up to be a little bit lower, 1672, or maybe a little bit higher to 1687. That would be the target on the upside for the bounce. And I can't see it doing much better than that. And I hope it makes its bottom in here in the next day or two where it's supposed to, and then gets a bounce. And if we get a pullback in the dollar, that will help it a lot. Platinum, I want to say one more thing about silver before I get there. I'm going to go to this chart right over here. Now, I just made a point that it looked to me like it was going to bounce, and the market forecast right over here, you see that is extreme oversold and giving a buy signal. So when you see all of the 3 different time frames in there down below 20, and this is an incredibly low reading that you can see right over here, that means massive oversold. You can see the distance from the slim ribbon right in here. You see the negative momentum, it's clear. And this is oversold here in the projection oscillator. Everything to me points cyclically and on these signals right over here that silver is about to bounce. And I'm sure it'll be bouncing with gold in it. And the timing I just showed you is really correct. So there's that daily cycle there getting ready to turn upward. The target at 1672. And that's a good reason to make a strong case about the condition there of platinum, of silver. I have platinum on the brain because we're going to go there right now. Now I'm going to show you the same thing in copper that I just showed you in silver in a moment. I want to remember to do that. So look at this pattern in here in the weekly. There's your cycle breakdown or violation right over here as it gets under that cycle low. You see the breakdown this week. This points to a decline, yes, out into March. So that is a pretty bad case for the platinum market. So breakdown in there in bad shape. I know I'm going to get emails. How do you make a case for silver and gold being good in January, February, and not seeing it in platinum? They can go differently, and platinum could way underperform moves in gold, and that really is the answer to it. Here you can see the bottom due right in here in platinum, and that is a point where we would expect it to bounce. So breakdown here on the weekly, very clear. The point where we're getting a capitulation right at the nested cycle lows over here, and likely to get a bounce there in platinum. Let's go to copper /HG. Copper really looks like it has a pretty good sized top in here, and it's rolling over. So it's now broken down far enough to get this into a yellow zone. We need to fix that in here, and this now becomes yellow. So it is now in a corrective zone right over here. The support it's at right down there at that 38.2%, an intermediate 50 right in here, the cycle low. Those are all very key areas, and this points to a decline here somewhere out into early February in the copper market. So if you got a rally in copper, I think it would be a sell. Now that said, look right in here. This is the short-term declining resistance area. If I had a low in here, I'd mark it a sell zone. I don't really have the area yet, so it looks to me like it's around 307.70 to around 310.70. So somewhere in that 3 penny area is where the resistance is. So I'm going to go back to the side by side so you can see what I'm looking at in here. Here is the downward turn, and it's very likely to continue down till February. That means that every rally would fail if that's accurate analysis. Here you could see the rally breaking down and failing, and then this being the sell area. So that's right up at that point right over there. that says to us that would be the shorting zone right up over there. We get the bounce. The bounce should not be able to do better than that area of around 307 or a couple pennies higher in copper. Bad pattern in there in copper, and pointing to a decline out till February. So the metals, not looking really great. Now take a look here. Now we just set a bottom due to form here in this cycle. When I look here at the HG, you could see the negative look in here as it's red zone and momentum is down. It's oversold in the projection oscillator, and again we have a buy signal in market forecast. So these are fairly reliable right there, and you don't get that many signals. As a matter of fact, in this 6-month period in here, that is the only buy signal. There is one sell signal right over here where they're all right up over the 20 number, and that was right here, and look what happened. So pretty reliable signal, and that says copper is likely to bounce along with silver, platinum. They're all in bouncing areas right now. So for aggressive traders, you could look for this bounce. I don't love buying big negative patterns on the weekly when the daily is in a bouncing area, but sometimes I do that when it's a high probability of a bounce, and I think we're in that area right now. And overall, all I can, I can't make anything but a poor picture for the near term in the metals. Let's say intermediate term over the next 6 weeks or so. But for the next week or two, we really look like we're in a spot where we could get a bounce in the short term. That's a look at the metals. Much weakened and a spot to bounce. So now we're going to look at the Treasury market. /ZN is the 10-year, and we have believed we're in a bear market. We believed we had a breakdown, and here's your big decline, here's your bear wedge, here's your breakdown right in here. Now I want you to follow the cyclical patterns in here so that you can see where we are. Now we originally had a 12-week pattern right in here, and then when it shifted over right there, we identified a 15-week pattern that was pretty good. So you could see the low right over here and the low right over here, and then the low spot on right here, and then right here. So we thought we were going to get a rally into this resistance zone. We fell short of that and then broke the cycle low. So essentially the timing is that this decline comes into February. This is a very bad pattern in here. The only way to change the pattern is if we had a stock market collapse and we got above this level right over here. So that looks like, we'll call it 125.15. It would have to get over 125.15 to change this very negative picture for the near term. We don't think that's very likely, and we think that overall we're going to be in a stair-step downward move. Take a look at these cycle patterns in here, and actually want to look at these last two full harmonic families right there. And you can see in here that there are 3 minor cycles within the big cycle. 1, 2, 3. You can see that clearly, the bottom in the nest right here, and then outstanding 1, 2, the bottom comes in, you get the rally, this peaks somewhere over here, and then moves down over here. So again, we look like we're in an area pretty soon where we could get a short in here off in the 10-year. The 10-year, note the downward slant in here. This is much weaker due to the flattening of the yield curve than the 30-year. The 30-year has got more of an upward look to it. And here's the same thing, the breakdown of the wedge, but now see, this is still in that green zone. It didn't have any kind of a breakdown yet, but it's in the resistance zone. We don't think it's going to be able to get a whole lot up through there. And then once the stock market maybe gets a little more of a break to the downside, this will peak, and then again this comes out into early February or so when that decline ends, and we think that some period in here in January there's going to be potentially some vicious decline in the bond market. Here's the daily chart right here. And you could see, remember, we had that downward slant right in here where we had this going on in the 30-year, in the 10-year, right? Well, in the 30-year, it's an upward slant. You can see that, and that's that yield curve acting on it. So again, this to me is the sell area right there, right around 155.08. And then I think it's going to roll over. Then you get maybe another, the stock market still not doing well over here in December. So, you get this break, you get this rally, and then I think you get that bigger break there out into February. So we're looking at range right in here, and if anything, 151, 155 and a half, that's a pretty wide range, right? But that's what it looks like. And I'd sell the next rally in here for a high quality trade. To the downside. So that is a look at the bond market, and now we're going to switch over to the stock market. Big tone change, in my opinion, in the stock market. The market breadth is really struggling. We have the low caps, which had this huge rally, really under almost constant pressure these last couple days. And finally, the cyclical patterns following the projections, in other words, not being influenced by a strong upward bias any longer. And there's a strong message in there to me as we look here at the S&P 500, SPX. So we had been looking for quite a while for the intermediate pattern to roll over. Now, let's just look at these again, because we have a lot of new subscribers in here, people looking at this for the first time. Here is 5 cycles on the bottom. And those are those dashed blue lines. And you can see the amazing clarity as each of these lows came around the 19th or 20th week. You could see that. That's the 20th week right there. And then this one right in here. A perfect cyclicality, an upward bias that you can see right in here. So it takes these patterns in here and turns them into this, as the upward influence gives you that kind of a pattern. And that's where we are right now. So we've entered into this corrective period right in here on the right side. Because it's a right-hand translation on the right side, this only looks like a minor correction coming. Minor would be, something like 5%, 8%, something like that. Yes, that's a minor correction. These other corrections we've had in here of 78 points on the S&P 70, those are minuscule corrections. So, a 5% correction in here would take it down to 25.30 on the downside. That's only 103 points from where we are right now. It's incredibly small number in when you look at the amount of corrections, the consistency of corrections, and the size of corrections. So the average correction in this bull market has been somewhere around 5.6% or something like that, which is incredibly small. But it's very reasonable that this one is going to be that deep. You could see the topping potential in here, but nothing all that significant in the S&P 500. Here's your daily chart in here, and here's the pattern it's following. So this big upside tick that you saw right in here was the morning on Monday, and that was after the tax plan passed. And it's been heavy since then. And you can see in here this small minor pattern right in here that we're focused in on, and that's this right in here. You can see that. And then this decline, this rally, and then this decline. This rally, decline, rally, and we're in this decline. So we look like we have approximately 6 more days or so in here on the downside. We'll call it 5 to 7 days to complete this pattern in here. This was actually an 11th day low, so we're 14. So we'll call it 5 or 6 more days on the downside. We expect that there's going to be some hard down day in here very soon. And then you can see that our projection is, because of this on the weekly cycle, that you won't get much. If we're right, you will only get minor rallies and then be moving to the downside again to try to get to that 5% correction level. But we are now starting to follow patterns where we weren't not doing that for quite a long period of time. So you can see we're pointing to the S&P 500 moving on the downside here. The NASDAQ NDX, Here's the weekly chart in here, and you can see it's a little more exaggerated notion of topping in there. The 5% level is right over here at around 6,100. That's about 200 more points. That's the best case I can really make for the NASDAQ, is giving up about 200 more points in the next 4 to 6 weeks based on the way this lines up. Here is the perfect pattern that you can see in here. And this was actually the 10th day low right over here. When we saw this, we thought it would fail on Monday. And that's what you got. So we're now 15 days. That points to about 4 or 5 more days on the downside. So this up day that we're having right in here, we believe it fails and then moves down. Our initial target over here is 61.73. Then you get a bounce. We'll establish that resistance level and then move to the downside again. So this is tracing out patterns that are now looking more realistic to us after such a long time of struggle of that upward bias really influencing anything that could have been negative. Russell RUT really getting heavy also. Again, look at the engulfing pattern forming in here. Now, this is only Wednesday. We're not sure. This really looks like a top warning. And then likely coming down for about 3 more weeks is the way this lines up. So we'll be looking for a decline to about 1474. We'll call it, at least 45 points more on the downside in the Russell based on that weekly chart. Here is the same type of a setup that we're looking at, and the big hammer rejection right over there, and that would be, the inverted hammer or shooting star. And that would be the good sign that it was failing, and it certainly did. So this looks like, based on these patterns, which are a little smaller than the S&P and the NASDAQ, that it's got a couple days down. Then we get a rally. The support area is at around 1495. You get a rally up into this area here, which then would be a screaming sell if it does follow this pattern. So that is a look at the RUT also. Let's just take a look in here as we look at the daily momentum. And here you see the Russell. It's still green. It's oversold. So, like we said, a couple more days and it's likely to bounce when you look at that. SPX, you can see in here, oversold on the projection oscillator and still green. So when you look at that, you've got to respect the fact that it has not had a significant breakdown yet. We think it's coming, but momentum doesn't really show that yet, does it? And when you look at the NASDAQ in here, this one gave up its upward momentum. Finally, you could see that it's neutralized there, but it's got some ways to go before that turns negative. On the intraday, there's your intraday patterns right in here. And you could see that we actually do have the Russell having turned into negative momentum, the S&P 500 having lost its upward momentum. And way back over here, the NASDAQ is where it lost its upward momentum and kept failing here at the slim ribbon. You can see that. So the NASDAQ clearly much, much weaker and turned down much before any of these. And if you were a pairs trader, it was just screaming at you that the NASDAQ was the one to be short. Now, for our members that get our trade setups, you will note that we were short NASDAQ and then we did a swap. We moved out of NASDAQ into a different one because NASDAQ was so far ahead on the downside. So that's why we made that change in there. So that's a look at the momentum in the stock market. Overall, we're looking for this to be the correction. We thought December would be a weak month. We still believe that's the case, that there's a risk here for the next, we'll say, 4 or 5 weeks in the stock market. All right, so now let's take a look at, as we switch over and look at the grain market. And today we'll look at coffee, cotton, and cocoa. Interesting pattern in cocoa. So a lot of you don't stick around and watch this stuff because we're past the stuff that you're really interested in, but you might want to look at this. So take a look first at corn /ZC. And here you go. It's rejecting that 23.6%. Again, we showed how this market has been relatively weak yesterday when we looked at the DBA. Here's your low that was due right over here. You can see that this is really an oddball because this is way off right over here, but then you're perfect over here. You see that? When this happens in cycle analysis and you get this variance coming in here, I got to tell you, there's nothing harder than trying to figure that out. And just like in any kind of analysis, sometimes it's going to just not work or give you a hard time. So this one bottom came right in time, and now it's gave you this reversal right over here. It's not a great looking pattern. It's trying to get its footing and get it ready to move up. You could see that in here in the daily as it starts to move over, and this, we would say that it probably has another 5, 6, 7 trading sessions before it can start to move up in any significant way. The wheat market really looks to us like it is coming to a bottoming area. It was different than the corn market. And you can see the nesting right in here, which is where the big low should be. Now check it out. Here's your nesting in here, gave you a big rally. Right, was an important bottom. Here's your nesting in here. Nesting means 2 cycles of different lengths having bottoms that come in a similar time frame. So that bottom comes here, you get the big upward move. The bottom of the nesting comes right in here, and then the potential for the big upward move. So we're just in this final period in here of a washout on the downside, and this has about maybe 6 to 8 days right in here before that's over with. And then we would say that the wheat market will be in much better shape. Soybeans market has been much better than these, and now it's given up some ground today. Let me just look at these last cycles right in here. So we're looking at the blue dash right there. This is the old cycle right in here, and it really got off. This is the one dominating right now. And you can see this rising pattern right there, and it has been rising. So it got up here to the 78.6%. Our projection was 1020. It got to 1016. So it's not all that far off, right? And this is the rising phase that we're in. We expect that it's going to get over that in here, and that it'll get its footing again and move up. It was giving ground today. But then some buyers came in right at the 13-day moving average in the middle of the slim ribbon and came right up. So what we're looking at in here is this resistance at that high at about 1015, 1016, this support zone. That's kind of the range that we're looking at right now. We expect that sometime in the next week it's going to come down, because we said corn and wheat probably have a week to pull back or a little more and get down. If it gets down into this area under 991, we think it's a screaming buy there for a move well up beyond 1020. So that's the spot that we're looking for in here. We have a little corrective period right there that fits in this green zone on the left, and that would be the right spot or a high probability buy once it pulls back in there in the next week. So that is a look at the soybean market. Take a look at coffee. Coffee had a nice pattern set up in there. We were looking for the low. It's still trying to make the low. It hasn't been able to get any real footing in there. We believe a base is built, but it's going to need to show upside in here in order to, have upside. Our target is up here, 1750 or higher, and this is where we are right now. And you can see these patterns. They're so spot on that you got to believe that this is a washout right here, and it's going to finally turn up in the next couple of days. So, that base being built, the resistance that I got right over here at the 89-day, in order to confirm, you need to get above that level, which is about where the 89-day average is, and that level here on the ETF is 1681. So it needs to get its footing in here and then move back to the upside. It's waffling in momentum. You can see the up, down, neutral. That's because the slim ribbons are so tight. I mean, this is the equivalent to a Bollinger Band being too tight, where it's really stuck in there, and the spring is being set to move to the upside. So that's a look at coffee, which we think is getting ready to finish this bottom and then move to the upside. Cotton's been a monster. We had it absolutely perfect, as that the low came exactly on that abandoned baby, right where the nested bottoms were. Excuse me. And that made the bottom. It just moved right up to the 38%, which is a reasonable projection. And that is just perfect analysis. We'll look for a top be formed in here, come down into January at some point, and then probably be able to move to the upside again. Here is the perfect cyclicality in here. Remember we said base building in here and put the question mark, and if we were right, it was going to move up above these levels, and just unbelievably good. And this is where the slim ribbon turned positive right over here, and at that cycle low, and it was just dynamic. So great analysis there on cotton, and it's nice when it works that way. Last one we're going to look at is a special, and this is NIB. This is the coffee ETF. I'm just going to show you the weekly in here, and you can see the major cyclic patterns that I want to go out further because they're so good. I'm going to go to 10 weeks and then come back for you to see all of these cycles. Look at these amazing cycles in here. I mean, it's perfect cyclic harmonics. Let's just get so you can see this clearly. Where each of these bigger cycles are made up of two smaller ones, right? So here's your big cycle here. Note the bottom right in here, so that was pretty close, right? And the bottom right in here, a little bit off. And as you get further back, they're going to be a little bit more off, because when you get to these closer ones, they're going to be spot on. You can see that. And the bottom due right over here. And each of these made up of, some of them clear two pieces, some of them not so clear. You can see the minor cycle right in here, and then right in here, right? And then this one almost not visible because this was so weak that it swamped the advance, and then came down right in here. And here's your half cycle bottom, your double cycle bottom, and getting ready to move up. I believe we have a capitulation going on in here, making this bottom, and that coffee is going to, that cotton, I can't even say it because I never look at it. Cocoa, this is cocoa we're looking at. That cocoa is going to make a bottom in here, and it's coming very soon to an important buy area. That's it. Looked at a lot of stuff. Tried to give you a lot of detail today, support and resistance levels, and a good sense for conditions of each of these, and any points that were really overbought or oversold that were giving any signals, like we saw there in silver and platinum, right, and copper, all looking like bad patterns for the intermediate, but bounces coming. So that's it. Let me know if you liked it. Love to get your comments, criticisms, or also get your accolades, and we'll post anything that you say that's nice up on the site. So hope to hear from you. That's it for FutureSpeak, and I'll see you in the next segment.